Well, India's largest bank, State Bank of India, reported limited stress in a current environment. In a tough environment, I would say SBI's performance has been fairly resilient. The profits grew at nearly around 55%, with profit of 6,500 crores, slightly above estimates on the back of controlled provisions. Operating profits grew at 5%. Net interest income growth was fairly subdued at just around 4%. However, this was largely on account of slower loan growth. The loan growth was fairly subdued for State Bank of India, growing just around 6 odd percent. On a YOY basis. Retail loan growth, of course, has been fairly strong, which has grown at 16.5%, but overall subdued loan growth did lead to just around 4% growth in terms of the net interest income. Margins, however, was stable at 3.1%. If you look at the asset quality, well, I would say it's fairly resilient. SBI has reported slippages to the tune of 15,600 crore during the quarter. This is far slower than 21,900 crore slippages in the previous quarter, and some of the analysts were actually working with a slippage of 15,000 crore. So from that perspective, it's an inline performance. Recovery and upgrades stood at 4,900 crore versus a 4,300 crore in the previous quarter. And if you actually look at the credit cost, that also has come down during the quarter at 0.79% versus a 1.12% in the previous quarter. Slippage ratio for Q1 stood at 2.5%, and management at the press conference did state that they will strive to contain the slippages within the 2% guidance. In fact, management also, if you look at the overall results, also one of the feature that stands out is the cost to income ratio has further come down to 51.8%. At the press conference, management stated that they will strive to contain the slippages within 2%, and slippages have come from SME and home loan book. Once economy comes back, slippages of 4,700 crore odd can actually be pulled back, and they are fairly comfortable in terms of the loan to value ratio. They also stated that stress in the home loan book is due to the disruption of cash flows in the SME sector, but most of them have been first-time buyers, and the GNPA in the home loan book stood at 1.39% as of June. It has come down in the month of July, and hopefully the GNPAs may come down to less than 1% for the home loan book. They also believe that the stress in the home loan book is momentary, and they have no plans to slow down on the home loan book. And they also stated that with regards to credit growth, SBI generally grows their book 1% higher than the overall economy, and hence they do believe that a 9% credit growth rate for State Bank of India is achievable. But so far, the country's largest bank has surely painted a resilient performance, and the stock was up in trade post the results. The stock has been best gainer on the Nifty Bank on a YTD basis.